Pointing south, big time for the Nasdaq. You're off 250 points there. Keith Fitz joining us this Monday morning. All right, Keith, why the sell-off?
You know, it's a combination of things. It's a combination of fear. It's a combination of uncertainty. But I got to tell you what, the extended nature of this lands squarely in the Fed's lap, in my humble opinion.
That means you think that the Fed cut interest rates too quickly. Is that what you're saying?
No, I think the Fed doesn't know what it's doing, and it lets loose commentary when it shouldn't. And so this idea that do we need it or don't we need it is moot. What really matters is they come in when the markets get settled and introduce uncertainty at a time when that's exactly what the markets don't need. So to me, this is all about Team Powell and the fact that they're using antiquated models that don't reflect the world we live in. I think we need a little bit more cuts. People are still hurting.
Yeah, but look at on the left-hand side of the screen, the yield on the 10-year Treasury, 4.77%. Now, you think that's a factor?
It is, because the money that big traders use to leverage up to their eyeballs costs them a lot of money. Anytime that rises, it makes borrowing more difficult and more expensive. So the first thing they do, Stuart, is sell off, usually starting with big tech because they can move it easily. There's deep options markets, and they're widely held. Now,
the earnings season starts again very soon. I'm not sure exactly when, but we're looking back at the fourth quarter, and we do that very quickly in the near future. It seems to me we need some really good earnings to keep up with these high valuations. What say you?
I share that perspective, and thank goodness we're going to get to go beyond the headlines back to real numbers. I think, a company like JP for example, potentially sets the tone. I think they're going to come in with strong growth. They move a lot of money. They're going to be the first sort of look at what Wall Street thinks about the newly incoming President Trump's policies. Are they going to be more relaxed or not? But they're also going to be a sign of indication. How much money is on the move for AI? Where are we going to fund things? I do wonder about how impacted they're going to be from California, though.
You think that JP is the best-run bank in America?
No question in my mind. CEO from all the way down, starting with Jamie Dimon, best run in America. That's the only one I own.
You also like Walmart. You're joining a lot of people that they like Walmart. It's got a lot of positive press recently. It's at $92 a share now. You like it. Where's it going?
Well, I'd prefer to think they're joining me, but that may be semantics. I've liked it for a long time because it's using AI to increase online traffic. It's going after Amazon, but they're also trickling that into the store. So I think it's going to be 125 or so. But the reason I like it now, right now, is because the beta, the measure of volatility, is about half of what the S&P is. So it's a source of stability that gives me the freedom to make choices like JPM, for example.
How are they using AI to enhance online traffic?
They're using it the combination of ways. So they're using it to do shopping assist. So, like when you click on something, you see 5 or 6 suggested items. They're using it to do stuff like that. They're using it to manage inventory. They're beginning to use it to manage throughput and how they do their purchasing. So all in all, it's going to be making the company more efficient, not just what the customer sees.
All right. So thanks very much, Keith.